If you run a real estate fund or syndication and your entire capital raising strategy is networking dinners, warm introductions, and hoping your existing investors refer their friends, then you probably need to hear this. Because there is a way to build a predictable, scalable pipeline of accredited investors coming to you every single week through meta ads. And most fund managers have no idea how to do it properly. My name is Richie Burner. I've been running an ad agency for over 6 years, spent millions of dollars on Facebook ads, and have built a complete client acquisition system for over 50 companies. And we're running this exact strategy for multiple different types of funds across multiple different industries like real estate or the notes industry. Whatever you name it, if you need accredited investors, this can work for you. And the results have been really good. So in this video, I'm going to break down this entire system so you can start building real investor acquisition pipelines instead of crossing your fingers at your next networking event. So let's get into it. The first thing we need to cover is something that most fund managers completely overlook. And it's the reason why 90% of them never get started with paid ads in the first place. Now, the old stigma here is that only like sketchy funds or people who had no other way of raising money, like they didn't have a network or they weren't well established or they didn't know people, were the only types of funds who were running ads on Meta to get investors, which is simply not true. And it's kind of an antiquated look and also kind of ignorant. So now this has changed quite a lot. You see fund managers and investment opportunities all over Instagram and Meta. And the real reason is because of this. Your ideal customer, your executive, your lawyer, your doctor, your person with a lot of money is scrolling through Facebook and Instagram. I know the most common thing is like rich people or successful people aren't scrolling through Instagram or social media. That's simply not true. Meta has the largest targeting platform for advertising in the world. And when you pair that with Meta's targeting, there is 100% a great opportunity for you to target your ideal investor on these platforms. Another thing you have to think about is scalability. As a fund manager, you understand scale pretty well. And you very well know that networking events can't be 10x'd overnight. They take up a lot of time and energy. Organic content can take years. And you can also make the argument that cold outreach, cold email, cold calling has more of a brand reputation risk than running an ad does. As opposed to Meta, where it works like water coming out of a faucet. As soon as you open up the faucet, the water starts coming out. That's you putting money towards your paid ads. As soon as you close it off, the water stops running and you stop getting investor leads. So once we get into the numbers and we know how much it costs to get an investor into your raise, then all we have to do is just calculate how much money you want to spend and how much money you want to raise, and it becomes a mathematical equation at that point. We could do it fast, we could do it slow. It all depends on how much money you want to spend every day on your ads. But there's one thing for certain, people are coming through that funnel interested in your opportunity. Listen, I've ran ads on Meta, Google, LinkedIn, wherever you want to run ads, and I can confidently say that Meta is the most scalable, the most consistent, the best cost, the best targeting, the best audiences by far for opportunities even like this. Now that you understand why Meta is the platform, what you actually say in the ads is what determines whether you attract real accredited investors or a flood of unqualified people who have no business being in your pipeline. Now, the biggest mistake funds can make when they start running ads is making really generic ads that don't specifically target any type of person. So saying invest in real estate or passive income opportunity that attracts real garbage leads. We need to map out every single type of accredited investor that you want to attract. For instance, a person who got hit with a massive tax bill and wants a depreciating benefit, someone who made money in crypto or stocks and they want to diversify their income, experienced limited partner shopping for a new sponsor, first-time passive investor sitting on a bunch of cash that's never spent it before. These are all real people that are on these platforms who are looking to invest. You can get these people into your fund and use their capital, but it's really hard to speak to these people when you're not addressing their situations, their outcomes, and their circumstances, and you're putting a very large, wide offer out there that's going to attract people that have $10,000 in a hope and a dream. If you put up an ad that says real estate fund looking for investment opportunity, 10% return on money, you're just going to attract people who are looking for a 10% return on money. They may not even have enough to qualify for your thing. And each type of person that we just talked about needs their own individual ads. And I'm not talking about just a couple ads here. I'm talking about 15 to 30 ads in an ad set, and each ad is individually targeting a different avatar until we find that one pocket of avatars that really loves investing in what you have. So we can't just write one script with like 10 different hooks in the same body. That stuff doesn't work. This is post Andromeda. We need diversified creativity so that we can let Andromeda use these creatives and target the people that we want to target. And if I'm telling you to write 15 to 30 ads, I obviously have to give you some sort of direction, right? By the way, if you're a fund manager or a syndicator watching this and you're already thinking about how this would work for your raise, click the first link in the description and book a call with me. I'll look at your deal. I'll show you exactly how we build the system for for you. Now, let me keep going. Every ad is kind of made up like this. So you have your hook. It's direct. It calls out accredited passive investors specifically. So we can lead with deal metrics here and be super specific on the benefit of investing with you. Call out the person's situation and circumstance before you do this. Now, the body is going to support the hook. It talks about the deal, your track record, your case studies, your proof, your projected returns, and try to keep it under 60 to 90 seconds. And for the call to action, keep it simple, keep it uniform. Don't overcomplicate this. Just try and be super direct. Give them directions on what to do next. Now, the last part is super important, and most people overlook this, but we need to look the part. So if you are a fund and you're looking for accredited investors, you can't be up there in a t-shirt on a beach somewhere or have 3 buttons undone in your kitchen. We need to be in an office. We need to be professional. We need to present. If you can film the actual asset type that we're investing in, that's even better. No gold chains, no Lambos. We want to focus on the things that people that are professional and want to invest are going to be interested in. So trust, professionalism. These are the things that people are looking for when giving someone their money. Now, there are more than just video ads out there. There's also clean static ads, which also perform very well for a situation like this. So we usually focus on 80% video ads and 20% clean static images with big headlines, deal metrics, and of course, a call to action. But having great ads means absolutely nothing if the place you're sending people to lets unqualified leads slip through and poison your entire pipeline. And this next part is where I see most money get wasted. And that, of course, is our funnel. How are we qualifying people and how are we getting them through the door? Now, for most B2B style funnels, you're going to want to do a booked call funnel with a landing page, an application. If they qualify through the application, they get a chance to book a call with you. Now, we're trying to focus very busy, affluent people, right? Although they are on these platforms, they are busy and they're not trying to fill out a form that's going to take 15 minutes. So what do we have to do? We have to use the in-app meta lead forms, what we call a high velocity opt-in funnel. Now, most people are going to say these are known for unqualified leads and bringing in tons of traffic, which is true, but most people don't know how to utilize these the right way. These forms are going to be set up with conditional logic. So we can ask 3 to 5 questions that will let us know if someone is truly qualified on the front end. This will reduce friction for busy affluent people, but also get the job done with respects to qualification. And the important part is we're doing the conditional logic before we're collecting their contact information. So if someone answers questions wrong or they don't have enough money to put down or whatever the question we use to describe if they're qualified or not, if they answer that wrong, they're kicked out of the form before they can even submit it. So we can ask them questions like, what's your ideal investment size? Are you an accredited investor? And if they fail at answering these questions properly, then they are disqualified and their submission does not feed back to Meta's algorithm. So we're not optimizing for the people who are unqualified. Here's one thing you have to understand. Meta is an AI machine. The data you feed it is what you get back. So that's why we only send qualified people and that conversion event back into Meta. So after they submit that form and they're qualified, they land on a landing page with a 5 to 15 minute VSL, breaking down the deal further with more information, getting really granular so they can get pre-educated before they speak to you. And we'll do that through utilizing the IED framework: introduce, educate, be direct. Also on that page, there will be a calendar embed to book an investment briefing, a full FAQ section in the text format for people who'd rather read than to watch your video. So there's a bunch of information on this page that's going to let everybody know exactly what they need to know before speaking to you. So what does that mean? There's more pre-qualifying and there's more pre-educating. So when people do speak to you, they pretty much know everything about the deal already. So here's the part that will single-handedly make or break your entire capital raising pipeline. And almost every fund I've ever audited gets this completely wrong. And this could be for multiple reasons they get this wrong. It could be just like lack of people or just lack of knowing. But speed to lead is the absolute biggest thing when you start generating new investor leads. You or your team must call and qualify these people within 5 to 30 minutes of them coming through your form or your funnel. Not 45 minutes, not an hour, not tonight, not later, not the next day, right now, as quickly as possible. This emotional state of peak interest in your opportunity is only going to last for a short amount of time. So when this lead comes through and they submit that form, they went out of their way to learn more about what you have to offer. And if they're qualified, there's a chance that they're highly considering investing in your opportunity. So why would you want that to wait? The longer you wait, those feelings start to go away. So we need to stay on top of them. We need to call them immediately. And I'm not just talking about people who book a call. We want to call every single person. So the people who come through the form and don't book a call, the people who just fill out the lead form, anybody that you get their contact information at any point in this funnel, we are calling them immediately. The next thing that's going to help show rates and speaking with qualified leads is your confirmation page after they book a call. The confirmation page in most B2B funnels is probably the most underutilized asset of all time. Don't waste it with like just some booking details and a headline that says, we'll see you on the call. There's so much we can do with that page. So here are some things that we could put on this confirmation page. A short 2 to 4 minute video that is setting expectations for next steps. The founders or the senior team members' direct phone number. 2 buttons linking to the investor deck and a firm overview. These are what we call trust assets. People want to know these things before they even speak with you. If we don't give them the opportunity to view it, they might not talk to you ever. 12 to 20 short FAQ videos answering every objection from real investment briefing calls. Here's a little pro tip for you. Just add a little button at the bottom that says confirm your call. When they click that button, it will bring them to their inbox where they'll see the email for the call confirmation. They'll accept it, and this will increase your show rates significantly. You might think the hard part is over once someone books a call, but what happens between the booking and the actual call is honestly the difference between 40% show rates and 80% show rates. And it's where the real money is made. This is what we call the nurture system or a pre-call email sequence. Usually there's 2 separate email sequences that are triggered when someone comes through your funnel. One for non-booked calls. So maybe they just filled out the form and didn't book a call on the next page. So the whole purpose of this nurture sequence is to get them to book that call. And one for leads who did book a call. In these emails, we're going to send them more trust building assets, maybe things that they've already seen or that we've showed to them, but we're resending them and we're doing it in the form of an email. So this could be investor testimonials, background on the founders, the firm's history, whatever is going to build the most trust with this potential investor. Layer on some SMS and personal outreach too. This is a great way to get in touch with people and make sure that they're answering. If we can get a response from people, they'll most likely show up to the call. Also, this way, when they show up to the call, they feel like they know you already. And finally, the part that ties everything together and determines whether you can actually scale this thing or whether you're just throwing money at Meta and hoping for the best. And this is going to be your media buying setup. So how your ads are set up in your ad account. Unless you're spending more than $500 a day on ads, I would recommend starting with the CBO campaign with a completely broad ad set and a ad set that's full with accredited investor interest stacks. We'll call this ad set the interest ad set. Those interests are going to be made up of 10 to 15 different interest types that are proven that you know that these people are interested in. These are interest and demographic signals, so like behaviors that we can send to Meta as suggestions for the type of people that we want to target for our ad. We're going to put 7 to 15 ads per ad set, and we'll let Meta figure out which ads to use and put out to our audience. Once one ad sticks, Meta will take all of that spend and put it towards the winner. With this offer and this niche specifically, broad does well, but interest stacks tend to win most of the time. Now, when we're setting up our ad, obviously it's not just the creative part. It's not just the static or the video. There's a copy section. There's the body copy or the primary text, the Meta calls it, of your ad as well. This is like your caption. So we're going to do 5 different captions: 2 long, 2 medium, 1 short. When it comes to optimization within the ad set, we're optimizing for the Meta lead form submission initially. Only qualified leads are going to fire this event, so the algorithm is learning about qualified leads and from clean data. And as the account matures and we have a ton of events from leads, then we can start optimizing for events that are down the funnel. So filling out another application or an event within the CRM, showing up to a meeting, a booked call. These are all things that we can take data from and send back into Meta. And here's the last thing with respect to ads, specifically for this niche and funds, this is a non-negotiable. We have to make sure that our setup, our ads, our copy, our primary text in our ads is FTC, SEC, and Meta policy compliant. After all, we are operating in a special ad category for an investment opportunity, so we need to be careful. So that's the entire system for raising capital through Meta ads. At this point, you have 2 options. So option 1, you can take everything I just gave you and go implement it yourself. Figure out the ads, the funnel, the qualification logic, the nurture sequences, the confirmation page, the tracking, all of it on your own, and deal with all the bottlenecks that come with it doing this for the first time. Or option 2, have us build the entire thing for you in 14 days so you can just focus on closing the investors that we give you. If you picked option 2, click the first link in the description right now to book a call with me, and I'll show you exactly how we'd build this custom for your fund. Also, if you want to watch a video where I go even deeper into how to set this up, click the video on the next screen now. I'll see you there.